Hey everyone, it's Rob B here with Rob D, and you are listening to the Property Podcast. And this week, it's a battle. Boom versus bust. Which will win? Or which is more likely? Well, we give the argument for both, and then we give you our honest opinion on what we actually think is going to happen. Listen to the end, because I think you'll be surprised with the outcome.
Welcome to the Property Podcast. Thank you for joining us. In case you don't know, we run a company that buys more than £100 million worth of property for our clients every year. You can find out about that at propertyhub.net/invest. So as you would expect, what's going to happen to the property market in the future? It's important to us, and it's important to our clients as well. So it's something we have a lot of conversations about and spend a lot of time reading about and thinking about. And we're going to distill all of that down for you and give you our opinion all in the next 20 minutes or so. So stick around.
It's time for our news story of the week, and we're very happy this week because last week we said we very much expect the Bank of England to cut interest rates down to 4.25%. And they did, so that meant no emergency re-record for us. Rob, that's the headline, but the natural trail of thought now is, what does this mean for mortgages? Are we suddenly going to see a load of rate cuts? Well, City AM have got an article, you can link to it in the show notes, which says mortgage rates are set to fall after Bank of England rate cut. So great news, Rob. Let's all get a little bit more money in our pockets.
Well, we'll see. It's an interesting one because it was far from a unanimous decision. The majority voted for a quarter-point cut. 2 members wanted to go further and have a half-point cut, but 2 voted to keep rates where they are. And all the language coming out of the meeting was very measured. So bets on the total number of rate cuts this year have actually reduced a bit. So it's one of those funny things where you think a cut is going to feed through into rates, but because everyone already knew about the cut, it had already been priced in. And if there's less enthusiasm for the cut than he thought, then rates might actually go up. In other words, it's all over the shop. So it's just as well, Rob, that we've got a mortgage market update coming up next week.
We will. That's going to be a must listen to episode because it's all a little bit confusing at the moment, but we'll demystify all of that next week.
Do you buy now and risk a crash, or do you wait and potentially miss out on a boom? That's the question that's always on every property buyer's mind. And at the moment, that's more true than ever because the property market feels so uncertain. Everyone's got very different opinions on what's going on and what's going to happen next. So in this episode, we're going to take a deep dive. We're going to lay out the different possibilities that lie ahead for the market and then say which we believe is the most likely. But Rob, before we could do that, I think we need to give a bit of context about what's happened over the last few years, because it's not been a particularly normal market, and what's brought us to this point.
So it's been a bit of a weird property cycle. Many years ago, we used to talk about the 18-year property cycle, and we both absolutely bought into that cycle. It was a cycle that made a lot of sense to us, and at the beginning, absolutely worked. And then we had COVID, which kind of changed things. And when I say kind of, let's face it, dramatically changed things, and not just for the world, but for property, because we had everyone believing that there was going to be a crash. Then we had a bit of a surge, what you could call a mini boom. And then demand just dropped off again. And a crash didn't happen, but a boom really didn't happen. It was just all a very weird time. And if you actually look, and we've covered this on a podcast in the last few months, this is the longest property has ever taken to double. And Rob, the big thing from this cycle that I think most people have missed, certainly not podcast listeners or regular podcast listeners, but wider society, is that we have had a crash. And something that we've talked about for a few years now is the silent property crash. We have had a crash of sorts, just not a normal crash and not one that most have noticed.
That's right. You've got to remember that while property pretty much stood still, we had that period of super high inflation, with inflation getting close to 10% at one point, meaning property stood still, inflation went up, rents went up, goods went up, wages went up, maybe not as fast as everything else, but they did go up, which means relative to everything else, property prices dropped. In fact, the inflation adjusted drop was 15% in a year and a half, which is the biggest drop we've had since 2008. And this went pretty much unnoticed by everyone because that's what happens when the sticker price, the number on Rightmove, the price you're paying doesn't change. It doesn't seem like house prices have dropped, even though in real terms they have. And that's why, Rob, as we went into last year, into 2024, there was not a lot of enthusiasm about the housing market. I think if you polled most people, if you looked at all the predictions, they said the house prices were going to fall. But that did not happen.
No, it didn't. In fact, it was a pretty decent year. Very decent compared to what expectation was. House prices, according to Halifax in 2024, went up by 4.8%, which is a good number. It sounds really good compared to what we've had in the last decade, but actually in terms of long-term average, it's a normal-ish year. But nobody expected that. Everyone expected a terrible year. And then we had one of the best years we've had in the last decade. That was a bit of a surprise. But yeah, even with quite a strong number and quite a strong performance in 2024, I think it's fair to say that sentiment at best is flat around house prices. And probably more realistic, I'd say a lot of people think that prices will go down. And our aim of this episode is to go, okay, well, what is the case for that? But also, what is the case for a boom? Are we more likely to see a boom from here, or are we more likely to see a bust? We'll present both cases, and then we'll reveal what we think is going to happen. So, Rob, let's quickly start with the bullish version, the boom. What justification is there for a boom to happen right now?
Well, that's a good question, because at first, to many people, that'll probably sound like, why you even bring this up as an option? Surely, from where we are, you could not go into a boom. But there is an argument, and I'll start laying it out. So I think the summary of this argument is, well, if prices haven't fallen after everything we've been through, then maybe they never will. So we've had a massive jump in interest rates. We've had political uncertainty. We've had problems with the cost of living. We've had an economic slowdown. If the property market hasn't crashed through all that, then maybe it has so much inherent strength. Maybe it has such a supply-demand imbalance. Maybe you're so mentally and literally invested in property that it is just not going to go down. And what's more, now you've got the prospect of interest rates falling. Maybe that means that more first-time buyers will be able to get into the market. First-time buyers really want to get into the market because rents have absolutely skyrocketed. But that against the backdrop of this supply-demand imbalance we've got, I'm talking myself into it, Rob. We could be looking at a boom.
So while Rob's rightly identified that not many people will naturally be buying into this right now, you have to remember that all booms start somewhere. And there is at least a case for why one could start. But let's go to where maybe more of the general public are right now. And let's go to crash. Let's lay out the argument of why we might be about to see a property crash in the not too distant future, or at least a sharp correction. So the first one, and I think it's a reasonable argument to make, is that the UK economy is weak. Now, the government may argue that it's doing okay, and I'm sure they would, because that's their job to promote the UK and their efforts to boost the economy. But let's face it, the numbers aren't great. And I don't agree with all the policies that the government has put out since they've got into power to strengthen the economy. And I know a lot of people in the UK, and interestingly outside the UK, look at the UK and go, it's not what it was. The economy is weak. The policies are weak. And we're not doing anything meaningful to boost the economy. Now, if you are hardcore Labour, I apologise. I'm not anti-Labour. I'm pro-economy. And the economy at the moment is at best okay. And that's the absolute best. But it's certainly not strong. And I'd say most people would say it's weak. So if the economy is weak, if we accept that for a moment, and it's not looking like high growth is on the cards, and it's more likely to decline than anything in the future, then you could argue that, well, prices of property are reasonably high, and if the economy's weak, then therefore the housing market could follow right behind it and also be weak. If suddenly unemployment starts to rise and inflation gets out of control again, then you could understand how the property market could be impacted by that. I think closely linked to that is sentiment. We talked about that already, and generally people are quite down on the UK. Not everyone, but generally, I'd say if you had to ask everyone how they felt about the UK's performance, economically at least, they'd be down. And people are generally down on the property market. All that eventually could force the market down. If the majority of the market continually believes that something is going to go down in price, it then tends to become a self-fulfilling prophecy. And what people believe eventually can become true. It's not guaranteed, but it is a thing. And economists talk about it, that if sentiment is weak enough for long enough and the consensus continues to go in that direction, then it eventually becomes reality. So we have to be careful. I wouldn't say sentiment is rock bottom, but it's certainly low. And if it becomes worse, then it could move the market as well.
That's right. And while you've got all this going on, you've also got an affordability issue. So property has actually got more affordable for first-time buyers over the last couple of years, but not dramatically so by any means. And at the same time, you've got a lot more households dealing with higher mortgage payments. And I believe something like a third of the very low rate mortgages that we had pre-2022 are still yet to roll off those rates and onto today's higher rates. But I think, Rob, you nailed it with a psychological point. Just like you said, a boom has to start from somewhere. There always has to be a trigger for a crash, but it doesn't have to be a huge trigger. If you just get the economy worsening a little bit, bad news around employment, bad news around something else, if it gets picked up in the right way at the right time, that could be enough to kill off whatever confidence there is and provoke a sudden shift in sentiment. So we've laid out both arguments. You've got a bullish view that says a boom could start. You've got a bearish view that says whenever it comes, whatever comes next will be a crash. So the big question then, Rob, is what do we think? And seeing as I'm talking right now, I get to ask you the question first. Which of those outcomes do you buy into?
Well, Rob, I think it's going to be neither of them. Okay, we will get back to if we were forced to pick one of the scenarios which we would go for. We will get to that and we'll explain why. But I think it's more important to discuss what we actually think is going to happen, the most realistic case. I think the arguments for a boom are weak, and I think the arguments for a bust are weak. People get quite excited, particularly about busts. The last 15 years, people have been saying property's going to crash. There's not enough there. First of all, we've not had a boom. You normally need a boom to have a crash. And not only have we not had a boom, we've rightly pointed out, we've had a silent property crash. And weak sentiment isn't terrible sentiment. People don't think the world is going to end economically anytime soon. It's not great sentiment, but it's not horrific. And interest rates are on a downward trend. So I think the case for a collapse in property prices or even a major correction just is not there. There may be people who say why it's there, but if you ask them why, they'll probably say because they're high. And then if you point out the silent property crash and then ask them a second question why, they probably don't have a lot else. People have strongly held beliefs on a lot of things, but particularly on property, but actually not built upon much of a foundation. It's more just emotional rather than based on any real information or any real data. But I do not see a boom either, Rob. It's just not going to happen. There's not enough there. There's not enough stimulus. There's not a massive cut in interest rates. There's not a massive injection of quantitative easing. There's no real reason just yet for it to boom. Normally, you need a trigger one way or the other for these things to happen, and there's not enough of a trigger. So, what do we think will happen? Well, there's something that we're calling stealth growth, which is a really fancy way of saying a bit more of the same. A bit more of 2024, really. Just solid, steady growth, maybe with sentiment gradually improving, but market conditions becoming more normal. And I don't think we've actually had normal. We've had suppressed for a long time. And we had that mini boom as well. But we haven't had normal for a long time. 2024, in terms of market performance, was the most normal year we've had in the last 10. And I think what we will see is a lot more normal, Rob.
Yeah, I agree. And what does normal look like? Well, it looks like prices rising kind of in line with, a little bit ahead of inflation. That's what property prices do over the very long term. And obviously, that's the average. There are times when they go ahead of that. There are times when they crash below that. But there are times in the middle when they just truck along normally doing their thing. And that does seem to me as well like the most likely outcome for the next little while. And if you look at forecasts, they're saying the same thing. I think it's Savills, and we've poked some fun at Savills forecasts in the past, but they tend to be better over the medium term than over the short term. They're forecasting 20% total growth by 2029, which comes out at about 3.7% per year. And that doesn't sound crazy to me. Obviously, there'll be big regional variations within that. I would expect places like the Northwest to do better than that, places like the Southeast to do worse than that. But as an average, slow, steady growth like that, I agree. I'm just not seeing the boom trigger or the bust trigger right now.
No, they're miles away. And by the way, you should be excited by normal growth or stealth growth if we're trying to rebrand it, because people just don't see it coming, this stealth growth. Because stealth growth is actually much, much better than we've had recently. 2024 was a great year for property. All right, not a great year, but great compared to what had gone before. If we get around 4% growth over the next 4 years, so we have 5 years in a row of around 4%, that's really good, because you're going to have rental inflation as well, but also with leverage. This accelerates everything. The growth you're really seeing is multiplied a few times over. We've talked about the power of leverage a lot. Please go and consume every podcast we've talked about leverage, because once you understand this, you get excited by 4% growth. Nobody really gets excited about 4% growth in any asset. But when you leverage and then you have rental income on top, it becomes very exciting. So that's why I think normal deserves stealth growth or something a bit sexier than normal, because normal is brilliant. And actually, normal is a better market to operate in, because normal you can get deals done. You might think you want a boom, and maybe one day that will happen. But actually, if you are building a portfolio, you want stealth growth or normal, because you don't want a boom, because a boom is normally the end of a cycle. And yes, that's when you can make some serious wealth, particularly at the beginning of a boom. But a lot of people who listen to this podcast are in the building stage of their portfolio. You might think you want it, but you don't. If you finish building your portfolio and you are not building anymore, then I can understand why you'd welcome a boom. But for those who are building their portfolios, these are ideal conditions. So celebrate that stealth growth. Embrace it, because it's much better than we've had. And with leverage and all the other things we talked about, it actually can accelerate your wealth dramatically, and you can still get deals done. So Rob, I'm delighted, which now, because I'm still talking, allows me to throw back to you. We did promise to say, if forced to pick, what is more likely to happen, a boom or a bust? And I'm now going to generously pass back to you for you to go first on that.
Thanks. Which one is the most likely? It's really hard to imagine either of those, but we do have to remember that sentiment can shift very quickly. We've seen this happen before. If I was forced to, I would say the boom argument, which I know sounds crazy at first, but it feels like the negatives are all very known. It's almost like the negatives are already priced in. But if you get the stars aligning and a few things happening, things could change. So what if interest rates come down faster than expected? What if there's some good news coming out of the economy? What if the government really puts their mind to it and decides that they'd like to get a boom going and they start messing around with stamp duty again? They bring help to buy back and the first time buyer part of the market really gets going. Don't get me wrong, we've already said that we don't think that this is the likely scenario for the next little while. But because everyone is already so aware of the downside, I just find the thought of a sudden drop from here even less likely. So that's me, but I'll throw it back over to you.
I agree, Rob. Absolutely can't see either of these happening anytime soon. But if you force my hand, it would be a boom. I think Donald Trump's interesting. He's in charge of the world's economy right now, pretty much anyway. You may not like that, or you may like it, but that is the reality. And Donald Trump is desperate to win in everything he does. I think if anything was going to happen, it would be him pushing to stimulate the market so he can get that short-term win. So he can go out and say, look, I finished and it was all brilliant. I think he's highly motivated to do that. So what would he do to make that happen? Aggressively cut interest rates, which he's indicated that's what he wants to do, and reintroduce aggressive quantitative easing, which inflates asset prices. I'm not saying they are good things, but they are things I think he's more than capable of implementing. And if he does implement those things, then the rest of the world will follow. And if the rest of the world will follow, we will have a worldwide asset boom, which would include UK property. Now, a lot's got to happen for that to happen. So I still think stealth growth is the most likely case. I also think if you have stealth growth for a number of years, people start to look at property and go, wait a minute, 4%, I'll have a bit of that with rent on top. And then suddenly that 4% becomes 5%. And then it builds the other way. That self-fulfilling prophecy happens in a different way because people get on board, more people start to believe property prices are going to go up, and it goes on from there. But that's many years away. So I think if any of these happen, both are years away, but if one was more likely to happen, it'd be a boom. But listen, let's get back to the reality. And the reality is, at least as far as we're concerned, that stealth growth is the future. But stealth growth doesn't have to be average. You can outperform the average. You listening to this podcast helps you outperform the average because you're educating yourself on a regular basis. Subscribing to our YouTube channel helps you level up to be above the average. More informed, more knowledge, hopefully better decisions. And those better decisions should be picking the best areas to invest in, picking the best strategy for you and your circumstances. By giving it this extra thought and attention, you can outperform the average. So that is what's key here. The average could be quite good over the next few years. But remember, it's an average. Some people and areas will do worse than the average, and some areas will do better than the average. I'm backing you as a podcast listener to do better than average. So suddenly that 4% becomes 5 or 6, and plus the rental returns on top, plus the power of leverage, means your portfolio is looking very good over the medium term. But that is down to you and the action you take. But I'm convinced you'll do it.
Time now for Hub Extra. We try to bring you that little bit more before we wrap up the show, whether it's a resource, a book, a life hack, something to make your life a bit better. Rob, what have you got for us this week?
It's a TV series that I stopped watching. Stick with me.
Oh, sounds great.
Producer Dan absolutely loves this TV series, and the TV series is called Severance, and he's super excited. Series 2 is out, and he's plowing through that right now. And I started Severance and stopped because it was just a bit too slow moving for me. And listen, I'm weird. You will probably enjoy it. But if you start watching it and you find yourself in the same camp, don't worry, weirdo, I've got you. So what do weirdos do? Well, I'll tell you what I did. I went to YouTube and I really wanted to know what happened because while it was a bit slow moving, it was quite mysterious and I wanted to know the outcome. So I went on YouTube and watched the Series 1 recap. And then when Series 2 finished, I did the same. And I got loads of joy from it because, as you can imagine, on YouTube, there's some really high-level content providers who do an amazing job of putting the recaps together. So what I was able to do is watch an episode for a series, 15, 20 minutes, got all the endorphin hits of the big points of the series, and then did the same for Series 2. Now, don't get me wrong, I watch series of other stuff and stick with it and don't do this on a regular basis, but I can tell you another TV show I did this with, and that was The Walking Dead. It just seemed to go on forever. And it turns out I was right. Series after series came out. I just wanted to know what the outcome was and what happened. Well, YouTube sorted me out. Years later, I went back and I was able to watch a recap of every single series, and they're in double digits now. And I think it was an hour long, but I was able to watch that hour-long episode, including the stuff I had watched, and then from the point I gave up and onwards, to understand what had happened. So if you have given up on a TV series in the last few years, and you think, you know what, I'd love to know what actually happened in the end, then YouTube's got you. It's a bit of a weird resource, but I thought I'd share it because I know there'll be other weirdos out there. Rob, I know you dropped Ted Lasso, but I absolutely loved Ted Lasso and I stuck with it to the end. So maybe this is one for you to find out what happened in the end with Ted.
That could pull me back in. You must get through murder mystery books so quickly. First 10 pages, skip to the end. Oh, Butler did it. Done. Next one. I get what you mean. And there's also a benefit to this, I think, of kind of know what people around you are talking about. And because TV has gone through this renaissance and TV is a big deal, doing what you've talked about is a way of knowing what's going on and keeping up with things around you without having to invest so much time. My version of this has always been to watch stuff ridiculously late and just like wait till something is finished. Then a few years later, people will say things like, oh, skip season 1 and then give up after 4 because it tails off. Then I'll just do the good bit. But I think your method eliminates that delay and saves you even more time. So I'm glad you shared it. But that's all we've got for you this week. We will, of course, be back next week to do it all again. And in the meantime, if you're not subscribed to our free newsletter, make sure you get yourself on that list at propertyhub.net/pulse because that is an unmissable roundup that drops into your inbox every Friday morning. But until we see you next, have a great week. Bye-bye.
Bye-bye.